Hey, welcome snipers, guys. It's a Saturday morning special right here. We're gonna do more of these, guys. I hope you guys do enjoy these. They're gonna be quick. They're gonna be about 5-7 minutes, just about a little bit of a trade recap to help you with a little bit of homework for the weekend to get ready for the upcoming week, guys. This one is titled Identifying Market Structure for Midday Scalping Later on in the day. Because when volume starts to move around 1 p.m., 2 p.m., leading into power hour, 3 p.m. Sometimes you get some nice moves on indices, such as NASDAQ, US 30. But once you identify the structure of what happened in the morning at the build of Wall Street. So let's take a look here. This is Thursday, June 2nd. Okay, so what I'm doing is I'm looking at the overall 5-minute structure leading into the midday. So what I can see over here is we do have this area of support resistance right up here. Okay, you can see that there's quite a bit. We tried to break this area, 12,640 on the 5 minutes. We had multiple failed attempts. We failed here, failed here. Here we have a nice little breakout, but it's a fake out, okay? So they faked the market to the upside and then brought it right back down, okay? So if you're patient, disciplined, you didn't take that, you would identify this area as we came back up and getting rejected. Now we're moving into 8:30, 9 o'clock, more into Wall Street. So now you can start to see that the market is trending down and we do have an established supply zone above us right here. So you can remember what we were saying. Dave and I were telling you, this is a static zone. You can bring across your chart and that will remain static. The only thing that will be variable is if the volume can break and close above, and then we can cause an imbalance in the market. Now, looking to the left of the chart as well, we have some nice support over here. And we see over here is 9:30. 9:30 a.m., this is Wall Street open in this area. Over here, we have 8 p.m. Eastern. This is when the futures market opened up. We dipped down and found a nice little bottom. So I like to locate these areas on my chart, and I like to put a line across and see how it will react later on for major open sessions for either London market, for Wall Street market, for power hour. And what we can do is we could draw a demand zone below this area leading into Wall Street market open, and we'll see how the volume reacts at these areas. The volume is variable. We can see right here, 9:30 a.m. 9:30 to 9:45, like Dave and I tell you guys, is very, very volatile in the market. If you do not feel comfortable trading these candles, then remain patient and allow yourself to see what the institutional move is. Right here, they came down, they broke that area of demand over here, and you see they came down. There's an imbalance in the market down to here, to this area. So what they basically did was they came down and they filled the imbalance. They came down, in other words, and picked up the money right here and right here. They grabbed the money, okay? So they came down, they triggered all pending orders in the market, stop loss raid, whatever you want to call it. They grab the bag, they grab the money, and they push it right back up. They come back because there's some more pending orders still in the market down there, hoping for the market sell-off, but they got triggered and then it went opposite direction with the wick. One more time, higher low. They come back down, pick up everything, and then they move the market up, but there is still some pending orders in the market still down there that they can see. So they have to come back down and pick up the money right over here near the demand area. So they come down, there's a big wick getting triggered, coming back up, and then we make a move all the way back up here. We come back down. Now it's about 10:30. So now if we start to play this out, we know that there's identifying market structure. We want to get above this supply area. Maybe we'll cause an imbalance in the market. And when we're looking to the left of our chart, we can see this is a huge liquidity fill over here. This is a lot of money to the left over here that they've grabbed everything from the bottom, and maybe they want to come back up to this area and fill that. So what I do is I like to put an area of supply above here, and I continue to watch what is going on. You can put alerts on your chart if you like. So let's play it out. So we held that demand area. Now, what do we see forming? We see a little bit of a W pattern. You can see it came down, aggressive liquidity grab to the low, came back up, formed the neckline. We came back down, double touch, nice support demand. So that's valid now. Now what we're looking for is the possible break. Maybe it comes up there, reject it. Then we start to fill the midday imbalance in the market. Okay, so let's play this out and see how it happens. Okay, so we get up now to the supply. Okay, so again, it could be an impulse candle breaking out and come back in. If we're patient and disciplined, we're going to wait to see volume close above. We want to cause an imbalance in the market, and we want to have confirmation. There's the candle that broke right out of there. Impulsive move. Okay, that was an impulse move. Now we close with volume above. What we're looking for in this instance is now volume to come back down to test this block, to test this order. Because now with the volume above, we flip this to a demand area. And we want to see if it's valid. Or we can get maybe a retest candle about 50% of this body all the way down here, maybe just below here. We could also get a continuation candle, could be an ignited bar and continue to move. So this is where we have to make decisions. Okay, so it came down red and bounced off. Okay, so we see it's getting still respected, a higher low. We see it's holding. Now we can think about maybe entering the market, or maybe one more candle is going to come down to test. Okay, so it comes down and it tests and comes back up. So now we see a little bit of consolidation because we just broke above this major area that we could not break above for a long time. That's a higher time frame. Okay, now it comes back down. See, it comes back down, picks up a wick, comes down, picks up a wick, comes down, pick up a wick. What's happening in here is consolidation. This is where they're accumulating now. Now buyers are accumulating because we just broke a major key supply area. So you will identify areas of consolidation at areas of supply and demand, because there could be a little bit of a buildup before the continuation move. So what I would do in this situation, I can see that they're building. I would maybe look for a possible buy above here. And if I take the buy, my stop loss could be about 50% of the consolidation zone. Or if I want to widen my stop loss, could be the entire zone above these wicks right there. That all depends on your risk management. So there's the candle closing above. Finally, okay, we came back down, candle closed above our zone. Now I'm looking for that nice little retest candle. Also, some traders buy the bottom down there, but if you're waiting for the confirmation move above here, we're waiting and then to take it. And there it is. There's the retest. We would be in a buy, stop loss, 50% of the green candle right there if you like, or on all the way on the bottom. As it goes up in profit, you get in on that wick right there on the break. You're in zero drawdown. You could immediately go to zero stop loss, no emotion in the trade. And now we're on our way to hopefully fill this imbalance. And what time is it? It's 11:45. So we're getting near noon where the midday move will start to happen. Comes back down, retest. If you have your stop loss down there, you're still okay. And then there's the move. And then we break above also this key area. So there's also money to be grabbed. Whoa, that's a big dollar sign. So we're coming down here to pick up some more liquidity. Look to the left on the chart. Where could we go up to? Possibly up to this area. And that's where we had the big sell-off after we came up to that area. So that could be a big supply zone in itself up there. We could identify it just in case volume comes up there, and we're looking to hold. But it doesn't even come up. So we build now a lower supply right here. So it's a lower high. And now if we break below this area, this was demand in the market. Okay, if we break below, maybe we could look for a possible short position below here. And this is a static area. So we could keep this throughout the day and see if we could break later on, because it will be a break of structure when we identify it. Okay, so it was a false break. See here, guys, that's why always it's critical that sometimes we wait for confirmation. See, this candle broke below, next candle opened, came right back down and went right back up. So if you're not taking impulse candles, guys, maybe this can help you. So this week, guys, try and avoid as many impulse moves as you can and try and be a little bit more patient. Just try it out this week. Try and wait for confirmations. It will save you from making some mistakes of impulse candles where this one came and closed right there. A lot of sellers probably bid on that, but you can see the next candle opened and it was green and closed 50% of here. So we can't kind of take a sell because we got bullish momentum and then it kept going up. And then above this zone, it came back up and closed above. And then you have a W pattern. Okay, so the W formed right there, neckline. There's the push, the break, candle body closed and continued to move up in the market. If it comes back below now this area, you could look for a bit break of structure later on in the day. This is where we kind of identify if there's divergence in the market in the end of the day, and you can start to look for things, but there was a massive push to the upside. So if the institutional move was established from Wall Street, where they came down and they picked up lots of liquidity, they grabbed all the money down there, nice move, broke through this key supply area, turned into demand, and they continued with higher highs and higher lows throughout the entire day. So if you're looking to short the market, there's small pullbacks because you're counter trading against the institutional trend. If not, you continue to trade with them. This was a Wall Street continuation bullish pattern, and later on in the day, we started to retrace back down. So guys, I hope you guys enjoyed this video. For going into next week, I want you guys to identify your zones and always look to the left to see where the liquidity is in the market. And also try this week to avoid taking as much impulse moves as you can and just try and remain a little bit more patient and wait for candles to close. And let us know at SST how your trading goes in the next coming week by using a little bit more patience and discipline and identifying your zones. So guys, thank you guys so much. I hope you guys enjoy your weekend, and I hope you guys enjoy these little quick videos, and we'll do a lot more of these coming. Okay, guys, thank you very much. SST, God bless. Have a great weekend.